Thank you, Shobjit. Good morning, everyone. I hope everybody has joined in. Maybe I can wait for a minute so that whoever is joining in can join in successfully, and then probably we can start. Okay, I hope everybody has joined in. So let's quickly start now. So to quickly introduce myself, my name is CA Abhinay Gupta, and I carry 15 plus years of post-qualification experience. My specialization lies in, technical accounting, IFRS, US GAAP, and ASs. I have participated in a lot of gap conversions projects for last many years. I have worked upon on various countries gaps conversions, including India's implementation when India has first arrived in India in 2017, and I am associated with the institute for last many years to deliver these lectures on the India's classes. So I'll try to make it informative for all of you and a value add. So let's begin. The topic for the day is India's 20 accounting for government grants and disclosure of government assistance, right? So as the name itself, gives us clue that we are going to do the accounting, right? For the government grants, right? So if something is meeting the definition of the grant, then we are going to do accounting for that along with the disclosure. But for the government assistance, right, we are not going to do any accounting as such, but only disclosures, right? We would be doing. So for the grant, it would be accounting as well as the disclosures. And for the government assistance, it would be only disclosures, right? So accounting and disclosures will be mandatory for all the government grants the company, is receiving. And for the government assistance, which are typically not the grants, only the disclosures part is required as per this standard, right? So we will talk about what government grant means, what government assistance means, how these two items are, differing with each other. So that we will talk in detail along with, numericals. But for the time being, I think it is very clear that for the grants, we are going to do both things, accounting as well as disclosure. And for the government assistance, only the disclosure would be required, right? Now, what is the scope of the standard, right? So scope is accounting and disclosure for the government grants and disclosures of other forms of government assistance, right? So this is the scope, right? So we are going to do accounting and disclosure for government grants and only disclosures for government assistance. Then there are 4 exceptions as well. Accounting for government grants, if entity prepares the financial information that reflects the effects of changing prices. So can I ask one simple question to all of you? Have you heard
Yes, sir.
or read the India's 29 accounting for economies in hyperinflationary situation?
No, not yet.
Not yet. Okay. So there is a altogether different standard, India's 29, accounting for, companies experiencing hyperinflationary situation, right? So for example, there are various countries who are passing through the hyperinflation situation, right? Venezuela, uh, Zimbabwe, uh, there are many more, Argentina, right? So all these countries are experiencing the hyperinflationary situation in their economy, right? So if there is any company who is, preparing the financials under the IFRS, right? So India is basically the converged version of IFRS only, and IFRS has been globally and widely accepted, right? So if company is preparing the financials under IFRS and that company might have received any, government grant, right? So in that case, India's IAS 20, basically the corresponding standard, IAS 20 will not apply. So same exception we also have in our India's 20, right? So if any company is preparing the financial statements governed by India's 29, right, then India's 20 will not apply for any such government grants. And the logic or the reason behind that is because under that standard, India's 29, everything needs to be reinstated in the currency terms, right? And that will differ with the approach we are going to study under India's 20. So there will be a contradiction, right? Hence, India's 20, to avoid that contradiction, simply excluding this particular situation from its scope, right? By putting a exclusion, right? Is that clear to everyone?
Yes, sir.
Okay. Then, government assistance in the form of benefits that are available in determining the taxable profit or losses. So I know you must be studying the income taxes as well, correct? So under the income tax, you must have, studied some sections like 80, 10A, 10IA, 10IB, right? All these, sections are providing income tax holiday period to various companies on meeting certain conditions. For example, if they are, putting up or setting up a factory in a special economic zone, says, or some other zones where tax holiday periods are provided, right? Or any sort of investment tax credits or accelerated depreciation, right? Under section 32, 7, I guess, if I'm not wrong, right? So all these benefits which are given by a particular act, right, like income tax act, right, then those are not to be treated as the government grants or government assistance by any chance, right? So although we were not supposed to do that, but still the standard is trying to clarify this by putting a expressive exclusion from its scope, right? So because these are tax driven matters, so they are not treated as a government grant or government assistance because this is publicly available. Whoever is meeting that condition, will be able to uh, receive those benefits under that tax laws, right? Then third is government participation in the ownership of the entity, right? So recently you must have heard that, Vodafone, has got its dues to government converted into the equity shares, right? So by virtue of acquiring the equity shares of a particular company, right, by the government, be it the central government, the state government, whoever it is, do you think it will tantamount to a kind of government grant the company has received? Do you believe that? Because it is a pure investment only, right? So, like other investors, mutual funds, FIIs, foreign institutional investors, right? Portfolio investors, FPIs, right? Retail investors, like we do buy shares of any company, right? Or suppose creditors who have dues and they are ready to convert their dues into the equity shares and receive the equity shares in lieu of the cash, right? So ultimately, they are also becoming the investor in the equity shares. So if the same thing government does, then we shouldn't be, have a differentiation, right? So government is simply acquiring the shares either by paying cash or by paying something else in lieu of those shares, right? So any investment by government in the company's equity shares, right, will not tantamount to a government grant or government assistance by any chance. Is that clear?
Yes, clear.
And the last one is the government grants covered by India's 41 agriculture, right? So there is a separate standard as well, India's 41. I'm not sure if this is already done in this batch by now or not.
Yes, sir. It's done, sir.
Done, right? So in that standard, you must have studied that there is a government grant related to the agriculture activity, right? That is governed by that very standard, right? Because that standard is taking care of those government grants which are related to the agriculture. Hence, this standard, to avoid any duplication or clashes, right, simply excluding that situation from its scope, right? So these are the four exclusions which the standard has, have. Now, my basic question to all of you is, what do you think what the government grant means? What is the government grant? What is your understanding? because we have to be very clear about the concept of the government grant first, right? And how it is different from the government assistance, and how it is different from some other benefits which are flowing to the company by virtue of actions taken by any of the government, right? So I will be talking three terms: government grant, government assistance, and other supports, right? So other supports is completely out of the scope of this standard. No accounting, no disclosure, right? So we are doing accounting and disclosure for government grant and disclosure for government assistance, right? And the third category is nowhere exist within the scope of the standard, but we need to understand what the third category of benefits would be, just for our better understanding of the grant and assistance. So now my first question to all of you is, what do you mean by government grant? Anybody? You don't need to be, precise in terms of the definition given by the standard, right? So whatever is your layman understanding, right, the general understanding which you have about the government grant, at least you can tell that, so that we will see what is our understanding and how the standard is defining.
It would be the sum paid by the government for spending with or without conditions. Maybe there would be some condition, not maybe there is no conditions. Without consideration.
Without consideration, some benefits. Basically,
Yes.
the keywords I was able to catch from your sentence, right?
Yes, right.
So without any consideration, if government is passing on some benefits to the entity, then it would be the government grant, right? You said. Others?
Yes.
Let's try to be participative so that
subsidies are other benefits to a specific sector to promote which we give, which direct government will give.
okay. So you mean to say some sort of specific schemes which are implemented by the government to promote certain categories of companies or certain specific sectors, right? That's what you mean.
Yes, sir.
Okay, perfect. Any other? I'm just collecting the thoughts from all of you, and then we will see how our thoughts or understanding is matching with the definition given by the standard. In case you are not speaking or want to speak, you can put a simple sentence in the chat box as well. That would be helpful. Okay. So let's see. What is the government grant? Government grants are assistance, right? So the keyword is here. Government grants are assistance. So some sort of help, some sort of, assistance is given by the government in the form of transfer of resources, right? So this is the real keyword in this definition, right? Transfer of resources. So some resources are getting transferred from the government to the entity, right? And when I say resources, what do you mean by resources? So resources means it could be cash, right? It could be land, right? It could be building, right? It could be, say, some licenses. Yes or no? Yes. Or some sort of, copyrights, right? For example, airport landing rights. Airport landing rights. Right? So, these resources either could be the cash or assets, physical assets, for example, land, building, gold, silver, etc., etc., right? or any other assets by whatever name called, right? Or some intangible assets in the form of licenses, copyrights, domains, etc., etc. For example, airport landing rights or any other, intangible assets if the government is transferring them to a particular company or entity, right? So these would be called resources. Now, when any of these resources are getting transferred by the government from the government to the entity, to an entity, in return for past or future compliances of certain conditions relating to the operating activities of the entity, right? So this is the definition of the government grant. So government grant means transfer of resources, right? Transfer of resources is the keyword. So grant means transfer of resources. Transfer of resources could be cash, land, building, licenses, etc. Anything which the government is transferring to any other entity without any return. But attached, there are certain conditions which entity needs to fulfill either in future or the entity has already fulfilled those conditions in the past, right? So it might be any of the situation. Either the entity has already complied with certain conditions which the government was expecting, and hence the government is transferring the resources now, or the government is expecting the entity to comply with those conditions in the future and transferring the resources now in advance, right? Assuming that the company will comply with those conditions in the future, right? It could be either or case, right? It's not mandatory that first of all entity should receive this grant, then only it will be regarded as the government grant in the books. So government grant either received already or expected to be received, provided certain conditions are satisfied, will tantamount to the government grant, right? Now, the crucial word is the transfer of resources. They exclude those forms of the government assistance which cannot reasonably have a value placed upon them. For example, free technical or marketing advice, right? For example, there is a specific advice which the government has given to a particular entity, then that advice only cannot be fair value, right? We cannot say that how much value it contains, right? Or at what value it will be measured, because in the absence of measuring the true fair value or the correct value of this sort of help, we will exclude all such advices or any technical or marketing support, right? Whatever the government is doing, right? So if the value cannot be reliably measurable, then this will be excluded from the scope of the government grant, right? And transactions with the government which cannot be distinguished from the normal trading transactions of the entity. For example, a favor to the entity by the government procurement policy, right? For example, there is a company which manufactures ACs, right? And the government is constructing a government office in the city, right? So the building is, needing, say, 100 odd ACs to be purchased and installed, right? So government has put that order to a particular entity for purchasing 100 ACs, right? So do you think that this purchase of ACs from a particular entity by the government, right, will be regarded as the government grant? How many of you believe this will be treated as a government grant?
No, it would not be a government grant.
Correct. Because it is a simple, normal course of purchase transaction by the government from the entity. As such, government is not transferring any resources to the entity for a free, right? Or without any adequate consideration, right? So it is a simple purchase. If the government does not purchase from this entity, it will purchase from the other entity, right? So it is a matter of the quality of the product, because of which this particular entity has been selected by the government, right? So normal purchase and sales transactions between the government and the entity will not be regarded as the government grant by any chance, right? Now, if somebody calls grant word by subsidy or subvention or any other words, right? So then will it differ in color? No. So by whatever name card, it's not mandatory that the grant document should use the word grant only. It could be government subsidy, it could be government subvention, it could be government premium, or any other word the entity or the government is using for the formal documents, right, around this transfer of resources from the government to the entity, right? So government grant means transfer of resources, as simple as that. Unless and until there is a transfer of resources, there wouldn't be any government grant. Is that clear?
Clear.
Okay. Now, what is government assistance in that case? So government assistance is action by the government designed to provide economic benefit. Okay. So in the grant definition, the keyword was transfer of resources. And in the assistance definition, the keyword is economic benefit. Specific to an entity or a range of entities, right, qualifying under certain criteria. For example, priority bidding quota for MSMED enterprises. So for all those companies who are registered under MSME, right, are eligible to participate in a particular bidding, right, which the government has recently launched, right? So unless and until the company's MSME, they will not be able to participate. Now, by virtue of giving this advantage to MSME companies over other entities who are not MSME, do you think, or how many of do you think that yes, there is some sort of economic benefit is flowing from the government to these particular entities, MSME entities? Because if these MSME entities are being prioritized in bidding over other entities, then there are high chances of these MSME entities, winning those contracts from the government, right? And once they win those contracts from the government, because of this priority given to them, they will be executing those contracts and generating the revenue and the cash flows for themselves, which essentially will be uplifting their economic condition, right? The entity's economic condition. So this would tantamount to some sort of economic benefit which is being passed on to these specific entities by the government, right? But here the difference is that government is not transferring any direct resources, right? So the only thing government is doing here is they are just prioritizing small entities over the large entities, and hence they are uplifting the small entities culture into the business, right? So there is economic benefit flowing from the government to these small entities by virtue of this priority bidding quota, but this will not tantamount to transfer of resources because government is not directly giving them anything as such, right? So this will not be regarded as transfer of resources, but certainly, yes, there would be a economic benefit because these entities will generate higher revenues, right? Higher cash flows, right? So their economic condition will be improving. So this is regarded as the government assistance in that case, rather than the government grant, right? Now, what we are going to do for these assistance, the only disclosure. So we are not going to do any accounting as such for the government assistance. So our task is easy in case of assistance. No debit, no credits, no accounting, no P&L impact, no balance sheet impact. The only disclosure that the company we have been given a contract by virtue of priority we have received in a bidding quota for a particular contract, right? So some sort of assistance or disclosure around these assistance is required in the balance sheet, in the notes to accounts, but no accounting as such will be applicable or required in this case. Is that clear?
Clear.
So if somebody is saying cash assistance, so cash assistance means transfer of cash. Transfer of cash means transfer of resources. Then what do you think? Will it be government assistance or it will be the government grant in that case?
Government grant.
Because this is the cash which the government is giving to a particular entity, right? 50 lakh check the government has handed over to the management, right? So this is a government grant because there is a resources being transferred, right, Leela?
Yes, sir.
Okay. Now, government assistance for the purpose of this standard does not include benefits provided only indirectly through the action affecting the general trading conditions. For example, provision of infrastructure in development areas or imposition of the trading constraints on competitors, right? So generally, what do you think? What are the activities government generally carries out? So government generally, constructs the roads, bridges, highways, right? All these things, right? Then they also see if there are any threats to our domestic companies from outside competitors, right? So if there are any countries who are, offloading the cheaper products as compared to our, domestic manufacturers, then, these governments impose certain trading constraints on those competitors or in the form of tariffs, right? Or any special additional duty on those imports, right? So that our domestic manufacturers will be able to sell the produce domestically, instead the general public buying those cheaper products from the third country. Is that clear? Now, if the government is taking such actions, for example, they have constructed a road, right, or a highway nearby to a entity's factory, right? So as per the master plan, the government was supposed to construct that highway, right? But the management had acquired the land, in the close vicinity of that area. And now, when government is constructing the highway, the management's factory, is just close to that highway. So it will be getting a benefit in the form of reduced transportation cost, because earlier there were no highways. So truck usually, consume 6 hours to reach from factory to some other place. Now, because highways are now constructed, so truck takes 3 hours. So instead of, because truck's time is reduced, so entity is able to save on the fuel cost, right? Now, how many of you believe that by this action of government of constructing a highway, all the companies who are having the warehouses or the factories nearby that highway, which are able to save on their fuel cost massively, right? All these companies are required to say that we have received the government grant or the government assistance from the government. How many of you believe this is a grant or this is assistance by any chance?
It don't seems like an government assistance. It's like for general in purpose.
Correct. So this is neither the government grant, because there is no transfer of resources from the government to the entity. Is that clear? And nor the government assistance, because there is no specific action taken by the government for this particular entity or for this particular range of activities, right? It is a general development, general infrastructure development in the country, by virtue of which these companies are able to save on their fuel cost, right? This is one of the example I have taken. There could be many more such scenarios. The logic behind, identifying whether it is a government assistance or not is, we need to understand whether it is a general, duty of the government to do these or to, action on these infrastructure, or this is a specific thing government has done for a particular entity or for a particular range of entity, right? So if it is in general development, then it will not be regarded as the government assistance, right? Similarly, tariffs, right? You must be hearing a lot of news around tariffs these days. So I hope you are easily able to correlate this thing, right? So if the government imposes any special additional duties, any specific custom duties, or any other taxes or tariffs, right, to restrict the import from the other countries or from competitors, right, so that our in-house or domestic manufacturers will be able to tap the market in a better way, then this is also a general duty of the government to do the safeguarding of the interest of the country, right? So as a, nothing specific government is doing for any particular entity, hence it will also not be regarded as the government assistance. So in these situations, neither the accounting nor the disclosure would be required in the balance sheet, correct? Because these are general actions of the government which are not targeted in the form of grants to a particular entity by virtue of transfer of resources or assistance to a range of entities by virtue of giving some economic benefit. Is that clear?
Yes, sir.
Any questions, doubts until now? I am happy to answer. Okay, so Ayush is asking why the income tax benefits are excluded if other assistances are covered. So income tax benefits are the tax benefits which the company, is able to receive by virtue of meeting those tax compliances or the conditions, provided under those income tax act, right? So that is not a specific action taken by the government, right? Uh, to give any economic benefit to a particular entity or range of entities, right? So that is not a specific action. That is a in general action by the government for anybody in the country who meets those conditions will be able to reap the benefits of the income tax, right? So those will not be regarded as the government assistance, because if the avenues open up to that level, then it will make the things really complicated for the disclosures.
Yes, sir. Actually, like that in the example, we have priority bidding quota for MSME. So we have a similar example where we have tax holidays for startups. So it just
So priority bidding quota and tax holiday. So priority bidding quota is a specific action at a given point in time by the government for certain MSME to uplift them, right? They are getting the advantage over the large enterprises to participate in this quota and win those contracts and generate revenue from operations, right? But when we talk about the income tax, so there are certain conditions. If those are met, they will be able to save on the tax payments, right? They will not be making those tax payments which otherwise would have been required, right? By virtue of those conditions, complying those conditions under the tax benefit, right? So those are not specific for a particular group of companies or for a particular range of companies. It is for everybody. Whoever meets will get the advantage.
But sir, let's say if we are talking about tax benefits, so tax benefits are economic benefits.
No, of course,
And
tax benefits can be regarded as economic benefits because ultimately you are able to save some cash outflow, right? But that is specifically excluded from the scope of the standard, specifically exclusion, because the standard doesn't want to complicate with the tax laws.
all right, so
Is that clear?
it's just we have excluded it to save on the complication part.
No. So it's not about, see, what's the intention of the lawmaker is to save on the complication or something else that is, in their head only. But because the standard is specifically excluding this particular item from its scope, so no questions asked, basically.
All right, sir. Okay, thank you, sir.
Okay, so let's do some examples. Free technical assistance or marketing advice and the provision of guarantees are forms of the government assistance to which no value could reasonably be assigned, right? That's what we have learned. Now, another example of government assistance would be an example of transactions with the government which cannot be distinguished from the normal trading transactions of the entity is entity is a government procurement policy that is responsible for a portion of the entity's sales. The existence of the benefit might be unquestioned, but any attempt to segregate the trading activities from the government assistance could well be arbitrary. So, in case there are any transactions between the government and the entity which are not customary in nature and can be challenged, that this is not as per the part of the government normal purchase policy or procurement policies, there are certain ifs and buts. The transaction price is different from what the selling price the company used to sell those products in the market or something else, right? Then this can be challenged, right? Whether it will be considered as the government assistance or not, right? Assistance in the form of priority bidding status. That this I think we have already discussed at length, right? So any bidding which the government has notified for a specific size of the companies or the class of the companies, would be treated as the government assistance for them, right? As and when they win those contracts, they need to disclose in their financial statements, right, about those assistances. Assistance in the form of credit facilities at the market rates. Now, if the government is providing any credit to any particular company or a group of companies, and the interest is being charged at the market rate of interest, right? If the government wouldn't have provided these credit facilities to them, then those entities could have obtained the credit or the loan from the banks at similar interest rates, right? In that case, what do you think? Is this a government assistance or not? Yes, no?
Yes, this would not be government grant.
Right. So this will not be a government grant for sure, because there is no transfer of resources. Although the government is providing credit facility, but that is being provided at a market rate of interest, which other banks could have done, right? If the government didn't do that, right? So this is not a transfer of resources, hence this is not a government grant, because the rate of interest is being charged by the government is matching with the market rate of interest. Had it been lower to the market rate of interest, for example, the bank offers loan, say at 13%, for example, right? And government is offering at 11%, right? Then there is a delta of 2%, right? The cheaper loan the government is providing to the entity. Now, how many of you believe this will be regarded as the government grant? Sure, 100%? Unanimous answer? Or is there any different opinion?
Yes, this would be the grant, the difference, the delta.
So this would be the grant or the assistance? So the question is, first of all, whether it is a government grant or government assistance, and if not both, then what it would be. So grant, how many say yes, it is a grant? Cheaper credit facility at a cheaper rate. For grant, nobody's there. Leela is saying grant. Okay. Others?
Grant, sir.
Grant. Okay. So anybody for government assistance?
Sir, I think it would be assistance, as there are no resources specifically transferred to the company.
Okay. Okay. So I think you are saying that because there are no transfer of resources, hence it would be assistance instead of the grant. Now, if you have taken this loan from the bank, how much the interest you would have been paying? 13%, right? Because the government has given this much amount to you on loan, but the reduced interest rate of 11%, right? So it means government is forgiving their right to receive 2% interest. So it means government is giving you a benefit equivalent to the 2% interest in the form of reduced outflow of cash from the entity to the government. Now, is there a transfer of resources? Yes or no? So waiving something, okay, transfer of resources doesn't mean that it has to be transfer only. It could have been a receiving less from you. Otherwise, you would have been paying 13%. Now you are paying 11%. You are saving 2% by virtue of getting this loan from the government instead of the bank, right? So this 2% saving in the cash outflow is equivalent to the resources saved in your hand, which otherwise would have been transferred to the government. So can I say this situation this way, that you paid the interest at 13% and thereafter the government returned the 2%?
Okay,
Yes
sir.
or no?
Got it. Got it. Yes,
Yes
sir.
or no? Yes. So
Yes.
if the government is not retaining 13%, returning the 2% to you, right? So that is a transfer of resource, correct?
Yes, sir.
Okay. Now, so we understood the government grant, we understood the government assistance, and we also understood any other actions of the government which neither tantamount to the grant nor tantamount to the government assistance. For example, general upliftment of the infrastructure, right? Or any taxes or duties or tariffs imposed on the competitors' products, right? To safeguard the interests of the domestic manufacturers. Now, what do you mean by the government? So as per the standard, government refers to the government. Government means central government, right? State government, right? Local government. Yes or no? Local government, right? Or government agencies and similar bodies. For example, SEBI, RBI, right? Or similar other bodies, right? Whether local, national, or international. So national government means central government, right? And the state government as well. Local government means your municipal corporation, like for example, MCD in Delhi, Municipal Corporation of Delhi, right? So this is a local government. Or international government. So governments of other countries, for example, USA or any other country, right? Or other similar bodies could also be, international bodies, for example, World Health Organization, right? World Bank, right? Correct. So any local, national, or international government or government agency or other similar body which is providing any sort of grant to a particular entity or any sort of assistance to a particular entity, right? So all those grants and all those assistance are covered within the scope of this standard. Is that clear?
Clear?
Okay,
Clear.
let's move now. Grants related to asset and grants related to income. Now, the standard has divided the grant into two types. First type is grants which are related to the assets. So basically the government grant are of two types, right? Related to asset and others, right? Others means related to income. So if something is not related to asset, then by default, it will be the related to income, right? So government grants related to assets are the government grants whose primary condition is that an entity qualifying for them should either purchase, construct, or otherwise acquire, right? Either it should be purchasing, or it should be constructing, or otherwise acquiring a long-term asset, right? Subsidiary conditions may also be attached, restricting the type of the asset, the location of the asset, or the periods during which this asset should have been acquired, right? So there could be n number of conditions casted, right? That a particular entity, if setting up a factory in a remote village area, right? For example, there is a village in a particular city or the outskirts of the city, right? And if any company sets up a factory over there and generates the employment for next 3 years to at least 500 people, right? Then there would be a grant given by the government to that entity as a 25% of the overall cost of the factory, right? So this is the grant. For example, government says generate employment for 500 people in next 3 years, right? For example, then 25% of the factory cost would be reimbursed, right? And the factory setup cost is, say, for example, 20 crore, right? So the condition is to set up the factory in a particular dedicated area, generate employment for at least 500 people in next 3 years, right? In that case, 25% of the cost, right? It means 5 crore. 5 crore will be given by the government in the form of cash to the entity, or there may be the government is opening up to grant land, right? Grant land in that area to any entity who is ready to set up this factory and generate employment for 500 people. Then this land would be treated as a government grant, because land is also a transfer of resource, correct? So either it could be in the form of cash, or it could be in the form of any other asset, right? By whatever is name called, whatever the nature of the resource, doesn't matter. The only thing matters is that the attached conditions are fulfilled either in the past or in the future, and the grant is expected to be received to the company or the entity, right? Now, if it is related to the asset, that is the purchase, construct, or otherwise acquire a long-term asset, right? For example, in our example, we are setting up a factory. So because factory is a long-term asset, right? So it is meeting the nature of government grant related to the assets. But if it was not requiring to set up or a factory or purchase or construct any other asset, it was like, for example, you need to, conduct the vocational training sessions or vocational training workshops. Vocational training workshops, right? In this remote village area, so that the people in that village will be able to uplift their skill set and find employment, right? So if the entity is coming up to conduct these workshops in this area, then certainly they will be spending some amount of money to conduct these workshops. For example, they budgeted that, say, 1 crore will be spent in the entire year for these workshops. And as per the grant rules, 50% of the expense will be reimbursed by the government as a grant to the company. Now, company is expending 1 crore and 50% is getting reimbursed. So it means company will be getting a government grant of 50 lakhs, right? Because there was no asset needs to be purchased, constructed, or otherwise acquired. Hence, this grant is not related to the asset. Hence, it is related to the income. Is that clear? So under the grant agreement, where any asset is being, the main item which needs to be acquired in order to be meeting the condition for that grant or qualifying for the criteria, then those grants are related to the assets. Otherwise, All other grants are related to income. Those are the two buckets which the standard has provided for classifying the government grants. Is that clear? Any doubts here? Questions? Any questions? Anybody? Okay. Now, so let's do a practical. Then we will come back to this theory and we'll talk about certain other aspects. Let's do this question first. An entity opens a new factory and receives a government grant of rupees 15,000 in respect of the capital equipment costed 1 lakh. So 1 lakh capital equipment has been purchased as per the condition of the government grant, and 15,000 rupees is the grant the company has received from the government, right? It depreciates all the plant and machinery at 20% SLM. Show the statement of profit and loss and the statement of financial position extract in respect of grant in the first year. So instead of getting into the extract preparation, just tell me how you would be accounting it for. First of all, you need to classify it, whether this is a grant related to the asset or whether this is a grant related to income.
Yeah, it would be grant related to assets.
For sure, everybody. Okay, so this is a grant related to asset. Now, forget about the grant. So 1 lakh is the cost of the equipment which the company has purchased, and 20% is the depreciation rate SLM basis. Now, so simple accounting, 1 lakh PP&D debit to cash, 1 lakh, right? And then 20% depreciation, 20,000 in 5 years, right? So 20,000 rupees depreciation P&L account debit to accumulated depreciation, right? 20,000, right? This would have been the entry. Otherwise, had there been no grant in place, is that correct?
Yes, correct.
Correct. Now, since the grant is in place, so we have to record for the grant as well along with the equipment. So there are two options. Number one, either I reduce the grant from the cost of the equipment. So I deduct 15,000. I say 15,000 is being received or reimbursed by the government. So my net cost is only 85,000, right? So hence I would be depreciating 85,000 at the rate 20%. So my depreciation amount would be 17,000, right? So this is the option one, right? Another option is I continue to depreciate 1 lakh because the cost of my machinery or equipment is 1 lakh only. So I will continue to depreciate at 20%. So my depreciation would be 20,000. So this is the option two, right? And because in this case, my grant is automatically getting accounted for, right? In this case, I need to do a separate accounting for the grant as well. So what I will do, I will say cash account debit or bank account debit, right? Because I have received the government grant, 15,000 to the government grant account, right? 15,000. Is that clear? This entry would be required, yes or no? If I need to record the government grant, will I be recording this entry in my books on the date I am receiving? Yes or no?
Yes.
Yes. Then, because this 15,000 eventually should be, amortized over the life of the equipment, right? So what I will do, I will do amortization in on SLM basis in 5 years. So 15,000 divided by 5, so 3,000, right? So 3,000 would be my P&L credit. So entry would be, what would be the entry in this case? So entry would be
Government grant debit to P&L.
Government grant debit 3,000, right, to P&L. Yes, 3,000, correct? Because I am amortizing the deferred government grant, right, over the period. So there are two accounting options available. Which one do you think is easy or more logical? So what are your thoughts? So there are two accounting treatments.
Option 2 is more logical because
Option 2 is more
users
logical.
get to know that there is a government grant.
Okay.
There is
But
no
option one is
checking.
more simpler, and we don't need have a separate account.
Right.
It will all amortize
Perfect.
over the asset.
Correct. Perfect. Both the answers are correct. So people who want simplicity in their life will choose for option 1, right? Because this is easy. No more entries, right? No more complications. Simple deduction from the cost of the plant and net amount needs to be depreciated. Life is sorted, right? People who wants to present the things in the financial statements in a more elaborative way, right? Who wants users of the financial statements to be more informative and more aware about what is happening in the company will pick up the option 2, correct? Yes or no? Because that is
Yes.
Presenting the government grant in the balance sheet as well separately, right? In the form of deferred government grant, correct? Now, prior to 1st of April 2018, under this standard, the option 1 was not available. Only the option 2 was available, right? But under IFRS series, both the options were available since day 1. But when Institute adopted this Ind AS, so they have carved out, right, initially, right? But later on, they realized that let's pull back this carve out and, allow. So 1st of April 2018 onwards, both the options are available under the Ind AS 20 as well. Prior to that, only option 2 was available, right? That is separate accounting, separate presentation, right? So deduction was showing the government grant by way of deduction was not available. But now both options are available under the Ind AS 2, right? Now, how it will be shown? So when the grant is treated as a deferred income, then how my statement of P&L look like? So my statement of P&L will look like depreciation at 20,000, the gross amount, because I have chosen to separately showcase and account for the government grant by setting up a deferred grant, right? And government grant credit 3,000, right? So 3,000 is 15,000 divided by 5, correct? Now, a statement of financial position, how it will look like, relevant extract, right? So non-current assets, property, plant and equipment, 1 lakh, less accumulated depreciation, 20,000. So my net book value, NBV, at the year end would be 80,000. Until now, everything is clear? Yes? Right? So this section is my P&L extract. This section is my balance sheet extract, right? Then my non-current liabilities, government grant, 12,000 minus 3,000, which is the current liability. So 9,000 would be the non-current liability and 3,000 would be the current liability. How many of you have understood this split? Or if anybody wants to make me understand why we are how we are arriving this 9,000, 3,000 and what's the need of separate presentation? Anybody?
Sir, please explain why this treatment.
Sorry, I'm not able to hear you.
Sir, please explain why this treatment is.
Oh, so that's why I'm asking. So just try once. Anyway, I will explain. So why? Okay, let me explain then. So my overall grant was how much? 15,000, correct? Out of 15,000, 3,000 is recorded in the P&L. So the net balance is left for the balance sheet is how much? 12,000. Now, in next 12 months, how much grant will be transferred or recognized in the P&L? Again, 3,000, right? So remaining balance would be 9,000, right? So 9,000 would be a non-current liability and 3,000 would be a current liability because this liability will be squared off, amortized or recognized in the P&L or transferred to P&L in next 12 months from the reporting date. And for all the liabilities, are we mandatorily required to present them in two categories, current and non-current? Yes or no?
Yes, sir.
Yes. Now, the basic question comes, why the grant is being treated as a liability, right? Why the grant is liability? It is a grant, which is a benefit from the government, right? Then why we are calling it a liability in first place? Anybody thought about this doubt?
Because it discharges somewhat of liability, which will be created if we don't get that grant.
Correct. So the grant will continue to be reported as a liability until it is fully exhausted and all the conditions related to the grant agreement with the government are satisfied. Because if 2 years down the line, 3 years down the line, by any chance, if it has come to the notice to the government that company has not complied with some of the conditions, then government may pass an order to refund the government grant, right? So in that case, it will become a repayable to the government, and hence, because it can become repayable provided all the conditions are satisfied. So unless and until all the conditions are satisfied, so it will continue to be treated as a liability because we are setting it up as a deferred government grant and showing it up on our balance sheet in the form of liability, right? So this is how the presentation would be. So this is a presentation thing only, right? Nothing more. So presentation doesn't tantamount, this to be refundable, right? So this is a liability which is presented as per the presentation requirements. All the liabilities needs to be segregated into current and non-current, correct? Now, what would have been the situation if the government grant, instead of being presented, accounted and presented separately, was deducted from the machinery? Then in that case, my statement of profit and loss extract would be the depreciation. 1 lakh minus 15,000 into my 20%, 17,000 would have been the depreciation amount in that case in my P&L statement. And on the balance sheet side as well, my property, plant and equipment cost would have been reduced to 85,000. That is the gross block, right? So gross block instead of 1 lakh would have been 85,000 and accumulated depreciation 17,000 deducted and net block would have been 68,000. So this is how my P&L look like. This is how my balance sheet look like in that case. Correct? Is that clear?
Clear, sir.
Clear? Okay. So let's go back to our theory. So here we were. So grants related to the assets and grants related to income. So whenever any asset is being purchased, acquired, constructed, then all the grant related to that asset would be treated as a grant related to assets and accordingly accounted for. Otherwise, it will be a grant related to income, which ideally should have been recorded in the P&L straight away, right? Now, forgivable loans. Suppose government has given a loan to you today and later on waives that, the repayment of that. Then what do you think? Whether the forgivable loan is a government grant, yes or no?
Yes, it would be government grant.
Type of payment.
Yes, because there are certain conditions. If the entity complies with those conditions, government will forgive the loan. So on the day one, it is a loan from the government to the company. But if there are certain conditions which are met by the company, then the loan will be forgiven by the government. So in that case, it will be treated as a government grant. Now the question arises whether on day one it will be treated as a government grant or whether on the date on which the loan was forgiven by the government will be treated as a grant. What do you think?
On the date when the loan was forgiven.
On the date when the loan was forgiven. Okay.
It
Others?
will, and the day one, it will be forgivable and it will be granted as a government grant. When the he don't follow the circumstances or we say certain conditions, then it will be far-fetched.
Correct. 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 So we are doing the accrual accounting, right? In principle, right? All our accounting standards, are based on the accrual concept, right? So on the day one, the agreement says that if you meet these 10 conditions, then this loan will not be demanded back. Yes or no? On
Yes.
day one, I know that if these conditions are met, then the loan will not be demanded back and it will be forgiven, right? Now, entity assumes on day one that yes, we will be able to meet all these conditions. Management is quite confident that they will be able to meet all these conditions. Hence, on the day one itself, they will treat this forgivable loan as a government grant only, right? Provided they will do a reassessment at the end of the year one, at the end of the year two, at the end of the year three, whatever the duration of that loan is, right? In case 2 years down the line, 3 years down the line, company is not able to meet those conditions, or company has defaulted, or company doesn't believe that it will be able to meet those conditions now. So there is a change in management estimate in that case. So earlier management was believing that they will be able to meet the conditions, hence this will be a government grant. But now 2 years down the line, management believes that no, boss, I think we will not be able to meet these conditions considering the typical business scenarios now going forward. So we don't think we will be able to meet these conditions. Since management is changing their estimate from the initial date, so now on this date, they will convert this government grant into the repayable loan, right? In that case. So that will be regarded as a change in accounting estimate under Ind AS 8. But on the day one, it is a government grant only. Unless and until management on day one is not sure whether they will be able to meet this condition or not. So in that case, instead of doing the grant accounting, they will be simply recording the loan in that case, right? Is that clear? Any doubts? Okay. Non-monetary government grants. A government grant that takes the form of the transfer of non-monetary assets such as land or other resources for the use of the entity, right? So if there is anything other than cash, it will be regarded as the non-monetary government grant. And because it is a non-monetary, then certainly to do the accounting, I must need to calculate the fair value first of all for this non-monetary government grant. For example, government has allocated, land to a particular company, right? Now that land which is given by the government is a non-monetary asset. Yes or no? Yes. Now, because company has received this land, got the registry in their name or whatever the documents are executed, now company needs to showcase this as a government grant. Yes or no? Yes. For showcasing that as a government grant, they must have calculated some value at what they need to do the accounting. Yes or no? Yes. What that value would be? So that value would be the fair value, right? How the fair values need computed? If you have already covered Ind AS 113 in this batch, yes or no, may I ask?
Not covered.
Not yet. Okay. So there is a altogether separate standard, the duty of which is to give you the fair value, right? So standard doesn't tell you which item to be fair valued, when it will be fair valued. The standard only tells if something needs to be fair valued, how the fair value needs to be calculated, right? So that's the coverage or scope of the standard, fair value standard, India's 113. And the definition given in that standard is fair value is the price that would be received to sell an asset or paid to transfer a liability in an ordinary transaction between the market participants at the measurement date, right? So of course, this definition is, looking very simple, but it has a lot of things to talk about. Certainly, you will get hands-on on this practical aspects of this definition in your 113 session, but briefly touching upon, fair value is the price that would be received to sell an asset, right? So what is the price the company will receive if they sell the land in the market, which they have received from the government in the form of grant, right? So what value it will fetch to the company if they sell this asset would be treated as the fair value of that land, to be simple and precise for our discussion and limited for our discussion, right? So that value needs to be calculated, and for this fair value experts comes into the play, right? So we will approach a fair value expert and ask to do the fair valuation of this land, right? That fair value expert will come up with the fair value of that land, and that fair value will be assigned to the grant as a government grant which is received in the form of land, right? Now, standard also gives another option. So if you don't want to account for the government grants at the fair value, then you can account them at nominal value as well, right? So that is also the option available, right, within the standard. So for non-monetary government grants, right, for non-monetary government grants, so there are two options. Either to account them at fair value, right, or at nominal value, right? For example, say 100 rupees. Okay. So is this option is freely available? Yes. Freely available. Correct? So it's upon management whether they want to go and record the fair value of this grant or this grant at the fair value, or they want to go and record this land at the nominal value of rupees 100, 1,000 or 10 rupees, whatever the nominal value they want to assign to it, right? And disclose it in the notes to accounts and the accounting policy, right? Now, just to quickly summarize what all we have studied in the standard until now. So grant means transfer of resources and compliance with certain conditions and related to the operating activities of the company. Assistance means some sort of economic benefits to an entity or a group of entities and certain qualifying criteria, for example, MSME or small entities or micro entities. Other benefits, general infrastructure development in the country or imposition of some duties or additional duties on competitors' products, right? So this is the general duty of the government, which has to be discharged because they are entrusted with that responsibility. So this is neither the grant nor the assistance, right? So for the government grant, if they are related to asset or if they are related to income, we need to do the accounting as well as disclosure for both of them. If they are government assistance, then only disclosure is required, and for any other benefits, nothing is required in the financial statements per se, right? Is that clear? This is what we have studied since morning until now. Now, although we have done a small practical around this, but how the standard, is talking about the recognition of the government grant, let's talk about that. So recognition of government grant only when there is a reasonable assurance that entity will comply with the conditions attached to the grant and the grant will be received. So as I previously mentioned, whether you will be doing the accounting after the receipt of the grant or as and when the grant agreement is, taken place, right? So we are doing our accounting on accrual basis, right? So we shouldn't be waiting for the grant to be actually received. So even if the grant is expected to be received and there is a reasonable assurance that it will be received, right? So we are good to go to account it for in our books of accounts as long as management believes that they will be able to comply with the attached conditions, right? So recognition depends on satisfaction of two conditions. Number one, management believes conditions will be satisfied and reasonable assurance that grant will be received from the government, right? If both the conditions are met, our accrual accounting conditions are met, and we are good to go to record the government grant in our books of accounts, right? Is that clear? Any doubts on this? Clear?
Clear, sir.
And if no
Okay.
grant is then received subsequently, then
Certainly. So in case the grant is not received subsequently, right? So as and when the signs of this reasonable assurance, not meeting anymore comes into play, at that very same day, management needs to reassess whether, they need to change the stand which they have taken on the day one. If the answer is yes, then it will be accounted for as a change in accounting estimate. In that case, this grant will be considered since the receipt is doubtful now onwards, so grant will be de-recognized from the books of the accounts on that very date. So it is treated as a change in accounting estimate. So even if the grant is not received, we are good to go to do record this, because we don't want to wait for the actual receipts. But in case 1 year down the line, 2 years down the line, it is believed that grant will not be received, right? Because of some recent developments or change in government. So we have contracted with a particular government that now that government is changed. Some other government has come into play. They are not going to, make the payment. So in that case, we will revise our accounting. So on that very date, whenever the signs arises, we will treat this as a change in accounting estimate under Ind AS 8. Is that clear?
yes, clear.
Okay. Grant will always be recorded in the P&L. OCI can never be used, right? So standard simply says that whether the grant is related to the asset, whether the grant is related to the income, right? So if it is related to asset, then amortization of grant will always be recorded in the P&L on a systematic basis over the periods over which the entity recognizes the related expenses for which the grant was intended to compensate, right? And if it is related to income, even in that case, it will be recorded in the P&L. So no OCI can be used for any government grant related entries. Is that clear? Right? So the practical which we did here, right? So this government grant which we had amortized, it will go to the P&L, right? Depreciation anyway will go to the P&L, right? If we have followed this approach, separate presentation, and if we have followed this approach, in that case as well, because grant is reducing my depreciation expense, so automatically impacting or hitting the P&L only. Is that clear? So no OCI is involved in any of the options, whatever option we opt. Correct? Is that clear? Any questions? Okay. Then we read about the government grants, right? If it is related to the purchase, construction, or otherwise acquiring any long-term asset, it will be treated as a grant related to asset. Otherwise, it is related to income. Correct? Now, government grant related to asset. So there are two options which we have already discussed when we were doing the practical. So either we need to account for this by setting up the grant as the deferred income. That is the separate presentation, right? Separate presentation. And or by deducting the grant from the carrying amount of the asset. That is net asset method, right? Correct? So these are the two options available. We have understood both of them. And in case of grant related to income, same way, either we record it in other income in our statement of P&L, right? Or deduct the amount of the grant from the related expense for which the grant was received. So in my previous example, when the entity was supposed to conduct the vocational workshops and they have incurred 1 crore as an expense, right? And 50 lakh was received. So either I can present in my P&L vocational workshop expenses at 50 lakh, right? Or I can report the vocational expense at 1 crore itself and 50 lakh grant as under other income. So this is the option available, and that is again a free choice. So it is all depending on the management's wish, whether they want to report the grant in the form of other income or they want to report the grant by way of deduction from the related expense for which the grant was received. Is that clear? Any questions, any doubts here?
Clear.
Okay. Other forms of the government grant. So there are certain, ways in which the government can give the grant. For example, they can provide cheaper loans at the below market rate of interest, right? Like we discussed already. If the company is getting the loan from the bank at 13% and government is providing the loan at 11%, so the 2% relaxation in the interest rate would be treated as the government grant, right? Now, what is the government grant? The whole amount of the loan or the 2% interest component only? What do you believe?
2%.
2% interest component only, correct? Because that is the real benefit which the government is passing on or transferring in the form of reduced cash outflows by the entity towards the government, right? So 2% relaxation in the interest rate is the government grant. Loan is loan, right? Anyway, principal amount has to be repaid, right? So that is principal amount is loan only. The 2% benefit is the government grant. Now, how this will be accounted for? How this will be calculated? So I hope you must have studied India's 109 financial instruments by now in this batch.
No, not yet.
Not yet. So when you go and study the India's 109, so you would be, doing the calculations of, computing the liabilities present value, right? And deducting it from the proceeds, and the delta would be treated as the, equity component, right? So that is called, amortization method under India's 109. So here, what we will calculate the present value at the market rate of interest, right? And then whatever the interest payments are being agreed upon to pay on the loan to the government will be treated as the interest payments, right? And the delta would be the grant. So let's do a practical around this first, and then remaining theory we will cover thereafter. After this practical, we will have a break. Okay. I know this is the break's time for you. A Limited received from the government a loan of rupees 50 lakhs, right? So 50 lakh is the principal amount of the loan at the rate 5% interest for 5 years and the bulleted repayment, right? So 50 lakh needs to be repaid in a bullet payment after 5 years. The prevailing market rate of interest is 12%. If the company has obtained this loan from any of the bank, then 12% would have been the interest rate charged by that bank, right? the fair value of the loan is calculated at 37,38,328. How it is calculated? So simply 50 lakh is discounted at 12%, right? So if you do the discounting on your calculators, then you will also arrive the same value, although it is given in the question for the sake of simplicity. How should the government grant be measured in the following scenarios? The loan is an immediate relief to rescue the enterprise. A loan is a subsidy for the staff training expense incurred equally for a period of 4 years, and the loan is to finance our depreciable assets. So there are three situations given in this question. If the loan is for this purpose, if the loan is for this purpose, if the loan is for this purpose, how you would have been accounting for this loan or the government grant, right? So would you want to give it a try once? I can wait for a minute, or else I can continue to talk about the solution. In case you have the calculators handy, at least try to build up the schedule, how the cash inflows and cash outflows will happen, at least that part. Okay, so let's see. You can match. So this is how the schedule look like, right? So the present value of the loan for the 5 years discounted at 12% given in the question will form as the opening balance, right? So this would be the opening balance, 37,38,328, right? Then interest calculated at the rate of 12% will be this much, right? But what is the real payment of interest in 5% on 50 lakhs? So 2,50,000 is the interest payment, real payment happening, right? So this is the interest expense as per the EIR method, right? Under Ind AS 109. But this is the real interest payment as per the agreement, right? And the closing balance is this, right? So closing balance would be the opening balance plus the interest expense minus the interest payment, right? So by continuing this exercise, right, we will reach at a nil payment after 5 years, right? Because in the 5th year, as per the agreement, 50 lakh has to be paid in one bulleted payment, right? And plus 2,50,000 interest for that very year, right? So this is how the schedule look like. Now, A Limited will recognize 12,61,672. That is 50 lakh the loan amount which they have received on the day one from the government minus the fair value of the loan discounted at the 12%. That is 37,38,328 as the government grant, and will make the following entry on the receipt of the loan. So bank account, how much cash is being received in the bank? 50 lakhs, right? Because the government has given 50 lakhs. Then loan amount, 37,38,000, and the deferred amount is basically the government grant, right? 12,61,672 would be the government grant benefit. Now, how this grant benefit is arrived? So the total amount received is 50 lakh. Total amount paid will be the 50 lakh at the end of the 5 year in one bulleted payment, right? and the market rate of interest is 12%, at which if I discount 50 lakh for 5 years, the present value arises 37 lakh 38,000, which will form the principal on the day one for the loan to be repaid after 5 years, right? And the interest 5% is paid actually on at the end of the every year, right? Now, this 12,61,672 will be recognized in the profit and loss on a systematic basis, over which the A limited is recognized as an expense, the related cost for which the grant is intended to compensate, right? So this is the logic. Whether the grant is related to the asset or the grant is related to income doesn't matter. We have to, amortize the government grant on a systematic basis over which the expense is being recognized in the P&L, right? Now, if scenario 1, the loan was given for an immediate relief to measure the rescue of the enterprise. So enterprise was suffering from cash crunch and government intended to, save the company, and hence they granted 50 lakhs, right? Loan on a cheaper rate of interest, right? So in that case, this 12,61,672, which is the grant component which we have just calculated, will be recognized in the P&L immediately. So in that case, what would be the entry? Entry would be bank 50 lakh to government loan 37 lakh and to P&L 12 lakh 61,000, right? Is that clear? So this will be transferred to the P&L on day one because there are no subsequent conditions attached, and hence on day one itself it is an income for the company. Is that clear? Because if there are no further conditions, so company is not bound to do anything, right, in the future. Hence, whatever is received has to be recorded as income on the same date itself. Correct? In case there were certain conditions that company needs to, incur this particular expense in next 3 years, 2 years, then it would have been, setting it up as a deferred income and amortizing it over the period, right, in the proportion or a systematic basis, or in the pro rata to the expense, right, for those years. But now the company is no more obliged to do anything, and they simply, received the check and accounted it for, right? Is that clear? Scenario 1 is clear to everybody?
Clear, sir.
Scenario 2, the loan is given as a subsidy for the staff training expenses incurred equally for next 4 years. Now, in that case, what the company will do? The company will set up the grant of 12,61,672 in the balance sheet and amortize it, over the next 4 years, right? So 12 lakh divided by 4, right? Or if, it will incur, or it plans to incur equitable expense in the upcoming years, right? Or if it plans to incur a different amounts of expenses in the next 4 years, then in that ratio only the grant will be amortized, right? Because it has to match the expense, for that very year, right? So scenario 2, amortize over 4 years into the P&L again, because OCI can never be used, correct? And the third, the loan is to finance a depreciable asset. Now, because here the asset has come into play, so the grant will become grant related to asset, right? In that case, 2 options opens up. Either I can set up the grant as deferred income, amortize, present it separately and amortize it, or I can deduct it from the cost of the asset itself, right? So if the company opts for option 1, that is separate presentation, they will set it up as a separate deferred grant, amortize it over the useful life of the asset for which the grant is expected to compensate. And if the company opts for second option, that is present it net, then it will present it net and it will automatically get subsumed in the P&L in the form of reduced depreciation. Is that clear? Any questions? Yes, no. Okay. So we were talking about other forms of the government grant before this practical. Now I think it's 8:36. Let's have a quick break of 10 minutes. We will resume at 8:45 sharp. Right? Is that clear?
Clear, sir.
Thank you. rate of interest loans, we just discussed before we went on the break, and we did a practical as well around that, right? So I hope the concept is clear how the below market rate of interest will be treated as the government grant, right? And how the accounting will be done. Correct. Now, the next point is the entity shall consider the conditions and obligations that have been or must be met when identifying the cost for which the benefit of the loan is intended to compensate, right? So whenever the entity, is expecting any grant to be received, right? So they must clearly understand what are the conditions and the obligations attached to that grant, right? And if they are confident that they would be meeting those conditions and obligations within the stipulated time as per the government grant agreement, then they will go ahead and do the grant accounting on an accrual basis, right? Otherwise, they need to postpone that accounting until that date when these conditions or obligations management starts believing that they will be able to meet, right? Number two, the grant generally are given for a specific cause, right? It's not that a free grant is available, right? In general, so in general, whatever the grants are received are for a specific cause, right? For example, to set up a factory in remote area, generate employments, for example, to do some skill development workshops, right? Or to compensate for any of the specific expense the company is incurring for providing any general benefit to the population in a particular area, right? So if they are specified in the grant agreement, then the grants should always be recorded and amortized in the systematic base on the systematic basis in the proportion of those expenses being incurred by the company year on year basis, right? Even if they are not related to the asset, right? So grant related to asset anyway gets amortized, right, over the useful life of the asset for which the grant is received. But even if the grant is not received for creating any particular long-term asset, but it is for some continuing expense the company would be incurring for more than 1 year, then it should have been amortized or reflected in the P&L in that very manner, right? So that's the prima facie expectation of the standard, right? That is the matching principle, right? I hope you must have studied the matching principle, the basic fundamental, right, accounting concept or assumption. So matching principles should be applied here. A forgivable loan from the government is treated as the government grant when there is a reasonable assurance that the entity will meet the terms of the forgiveness of the loan, right? So this we discussed previously as well, that when I asked the question whether the forgivable loan will be treated as the government grant on the day one or on a subsequent date. So it will be treated as a grant on the day one if the management believes that they will be able to meet the conditions whatever are there stipulated in the loan agreement, so that loan will be forgiven. If the management believes that they are not able to meet the conditions on the day one, then on the day on which the management believes that they will be able to meet those conditions by virtue of which the loan will be forgiven by the government, then only on that very date it will be accounted for as the government grant. Until then, it will be a plain vanilla loan from the government. Is that clear? Anybody? So loans at below market rate of interest, right, and loans which are forgivable are two different things, right? So forgivable loan means the principal amount will be forgiven by the government provided the certain conditions are met. And loan at below market rate of interest means that principal amount will anyway be repayable to the government. Only the rate of interest benefit is passed on to the entity for the duration of the loan. Is that clear to everybody? Right? Forgivable loan and loan at below market rate of interest are two different things. Perfect. a government grant that becomes receivable as a compensation of the expense or losses already incurred for the purpose of immediate financial support to the entity with no future related costs shall be recognized in the P&L as and when it becomes receivable, right? For example, there has been a fire broke out on the plant of the company, right? And the local government or the state government of that, city or state, believes that if this company doesn't survive, then there will be a massive loss of, employment in that very area, right? To safeguard the interest of the general public's, employment loss, the government came up and provided a immediate relief, say a handover of 50 lakh rupees check to the entity to compensate the loss incurred to that company because of the fire, right? Now, how what do you think this 50 lakh would be treated as? Is this related to a asset or is this related to income?
Income related and will be expense out as we have incurred.
Correct. So because the loss has already been incurred, and just to mitigate the impact of the loss on the company's financial health, the company has granted this help in the form of cash, right? So there is a transfer of resource and there are no conditions attached to it. It is just a loss recovery for the company, whatever the loss company has incurred. So hence it will be a income related grant and will be recognized in the P&L in which it becomes receivable, right? So as and when it is clear that it will be received, it will be recognized, right? Non-monetary government grants. So like I previously mentioned, government can give land or certain other assets in the form of, say, intangible assets, licenses, or any specific rights to operate or a business in a particular area, right? Some permits. So whatever the permits, licenses are given free of cost to the entity or at a reduced cost to the entity, then that will tantamount to transfer of resources and hence will tantamount to the government grant in the form of non-monetary, because money is not being transferred, right? So non-monetary government grants are recorded or accounted for either at the fair value, right, or at the nominal amount, right? So either at the nominal amount or at the fair value. Fair value will be determined in accordance with the standard 113, right, which I just discussed briefly, right? So once fair value is determined and management has opted to account for at fair value, so they will assign the fair value in the books of accounts. Otherwise, they have the option to account for it at nominal value if they don't want to get into the complexities of getting the fair value done, right? So this option is freely available. Okay. Now, sometimes it happens that grant is received by the entity, but there are certain conditions which are yet to be complied, and because of non-compliance of those conditions or default by the entity to meet those conditions or provisions which the grant agreement had contained, now the grant has become repayable to the government, right? So the grant was received in 2015. It was expected that entity will meet the conditions in next 5 years, say 2020. By the end of the 2020, the company was not able to meet all those conditions, and then government sent a surveyor to do the audit whether the government grant conditions are met or not, or that surveyor submitted the report to the government that company defaulted on XYZ conditions, right, by say 2023, and thereafter government issued a repayment letter to the entity, right? So in this scenario, what do you think the company needs to do? Just whatever the thoughts you are having in your mind, you can let me know. What do you think? What are the repercussions of this repayment letter received by the entity from the government? So, because now the grant which has been originally received by the entity now becomes refundable, right, to the government. So in that case, whatever the amount becomes refundable, that will be recorded as a liability in the books of accounts now because of this trigger? Yes or no? Prima facie, it becomes a liability on the part of the entity to refund some amount, whatever is being asked as per the refund letter, right? And because this is to be treated as a change in accounting estimate, so we are not going to impact our previous year financial statements by reinstating that because this government grant was expected to be recognized based on the conditions met, because we did not meet the conditions realized later. So let's go back and correct our financials. So we are not going to do the reinstatement or prior period financial statements revision, right? The only thing we will do now is to account for this liability as a change in accounting estimate, right? Now there could be again two scenarios. Either the grant which had originally been received was related to the asset or income, right? Because there were two types of grant. So in case the grant was related to the asset, then how this repayment will be accounted for? And in case the grant was related to income, then how this repayment will be accounted for, right? So let's talk about this. So standard says if the grant was related to the asset for which the refund letter is issued now, then it will be recognized by increasing the asset carrying amount, right? By the cumulative additional depreciation that would have been recognized in the P&L to date in the absence of the grant shall be recognized immediately in the P&L, right? What does this mean? So suppose in our previous example, 1 lakh was the cost of the machinery and 15,000 was the grant, correct? So 85,000 was the net approach which we had adopted at the time of recognition of the grant for the machinery, right? And this 85,000 has been depreciated over 5 years on SLM basis, right? So divide by 5 is equal to 17,000, right? Was the depreciation which had been charged to the P&L. Had the grant not been in place, right, what would have been the depreciation in that case? So 1 lakh divided by 5, it would have been 20,000, right? Now, year 1, I charge 17,000, right? Year 2, I charge 17,000, right? And at the end of the year 2, the refund letter has been issued, right? So until now, how much depreciation? Less depreciation had been charged. So 3,000 here and 3,000 here. So all in all, 6,000. 6,000 is the depreciation which otherwise would have been charged into the P&L had the grant was not in place. Are you with me on this?
Yes.
Correct. Now the standard says because at the end of the year 2 or at the beginning of the year 3, right? I'm just taking a year end of 2 or beginning of year 3 for the sake of simplicity. Anyway, if this letter comes on some odd date, say 19th of July, then certainly I will do a days basis pro rata of the depreciation calculation, right? Oh, I hope that is clear, right? Now, for the sake of simplicity, 6,000 is the depreciation amount that should have gone into the P&L had the grant not been in place in first place, right? So standard says cumulative additional depreciation that would have been recognized to P&L to date in the absence of the grant shall be recognized immediately in the P&L by virtue of this grant refund. So if the grant is becoming refundable now, so this 6,000 will be charged to the P&L immediately. So the entry would be P&L account debit to accumulated depreciation account 6,000, 6,000. Is that clear? This entry is clear to everybody?
Yes, clear.
Right? Additional depreciation, which was saved by virtue of the grant, now needs to be recognized in my P&L on immediate basis. Correct? Because I have to bring my books to that, to the same level. If had it been there was no grant recorded, right? Now, after this, another item I need to do is check for the impairment of the new carrying amount of the asset. So what is the carrying amount of my asset now? So earlier, my carrying amount was 85,000 in my books, right? 85,000 minus 17. Minus 17. What is my carrying amount at this date?
51,000.
51, right? So 51,000 is the carrying amount of my asset as on date when the grant has become refundable. Now, for this 51,000 carrying amount, I need to check the impairment under which standard? Ind AS. Which standard? 36, correct? So Ind AS 36 will also become applicable here to check for impairment in this case, right? As per the Ind AS 36, if there is an impairment loss also comes into play, right? Then that impairment loss will also be recorded under Ind AS 36 into the P&L. Impairment loss is always recorded into the P&L. So P&L account debit, right? To asset account, right? Whatever is the impairment loss, XYZ, right? So these are the two things I will do upfront on the date when the grant becomes refundable if the grant was related to asset, right? Or if the grant was related to asset and was, instead of getting reduced from the asset, was set it up on a deferred income, right? The another option the company had initially adopted. So in that case, this is not required to be done because anyway, I have not reduced the grant from my asset. So my depreciation instead of 17,000 was anyway flowing to the P&L at 20,000 only, right? In that case, in the second scenario, second case, second option, right? So nothing is required in that case. The only thing is required, I will reduce my deferred income balance by the amount which is repayable now, right? So if the amount of refund is the full amount, then certainly how much balance I am sitting at in second option. In second option, initially 15,000 was the grant I received and 3,000. 6,000 I have already recognized into the P&L. So 9,000 is sitting in my balance sheet as a deferred income grant, right? Now the demand letter says refund 8,000, right? What entry I will do? In this case, the entry I will do government grant account debit 9,000 to P&L account 1,000 to bank account 8,000. Is that clear? Because on the settlement, I am getting a gain of rupees 1,000. Ideally, the demand letter should ask for 9,000, but they have asked for 8,000. So 1,000 is the gain to be transferred to the P&L. If the demand letter says the amount is, say, 12,000, then what would be the case? So again, the government grant carrying amount 9,000, right? Debit to bank. Bank anyway 12,000, right? Sorry, 12,000. And P&L would be come in on the debit side, right? How much? 3,000. Correct. So this 3,000 basically increasing the outstanding balance. So that's what the standard is saying. So I first of all reduce the outstanding balance of the by reducing the deferred income balance by the repayable amount. So how much amount is repayable in this case? So in first case it was 8,000. So I reduced it by 8,000. In second case it is 12,000, which is over and above the existing outstanding balance. So in that case, I will take a hit of the delta amount into my P&L. So 9,000 fully will be de-recognized from the books. 3,000 hit to the P&L and 12,000 is the overall payment. Is that clear? Same goes for 15,000. In case the government asks for entire amount, 15,000, whatever it has granted, Then that's again the same treatment. 9,000 debit, bank 15,000, and P&L 6,000. Clear?
Clear, sir.
So what is the position of PP
Position of
assets?
which asset?
51,000.
Sorry, your voice is cracking. I was not able to understand properly.
So what is the position of asset in terms of
Huh.
amount?
Which asset?
Sir, for the
51,000.
which have been government grants had been
So the asset which has been acquired, right? You talk about that. In the second scenario, when the deferred grant was not netted off from the asset, what would be the impact on the asset?
No, sir.
Right?
No, sir. So P&L account debit 6,000 to accumulated depreciation 6,000. So the asset is reduced from 6,000.
Of course. So accumulated depreciation, in nutshell, what it does, it reduces the asset amount only. Na? Net block comes after deducting the accumulated depreciation from the gross block. Clear?
So what is the balance of assets after refund of grant in this case?
So which case you are asking? The first case?
Yes,
This
sir.
one?
Yes,
This-
sir. 51,000.
This one? Na? Okay. So here, so there were two situations. Had I, if option one, if I had deducted the grant from the net asset, right, and I was depreciating 85,000, right? Or if I had opted the option two, not deducting the grant from the asset value, but recording it separately. So in case the grant had been recorded separately, so anyway, this would be the treatment on the date of the refund. And if it had been deducted initially from the asset only, right? Then what I discussed, the additional depreciation, which would have been charged had it not been reduced from the asset, will go to the P&L. So 6,000 will go to the P&L on the very same date, right? And whatever is my carrying amount is how much? 15,000, 51,000, right? Because 85,000 was the net book value, and 17,000 were the two depreciations I had charged. So 51,000 was coming as the opening carrying amount, net block, right? But what would have been the gross block of this? So the gross block again will continue to be the 1 lakh in this case, because the grant is received, right? Now, how much depreciation I have charged? 20 and 20, 40,000, right? So net block will be 60,000 in this case, because this 6,000 additional depreciation which did not get charged, I am charging now, right? So in this case, I will reinstate 60,000 as my net block in that case. Because when we maintain the fixed asset register, we generally maintain the gross block in the separate column, accumulated depreciation in the separate column, correct? And the net block comes thereafter, right? This is done asset wise, right, in our fixed asset register. So I do have all the values available with me, right? So I will simply reinstate this.
But sir, I confuse it. Asset value carrying amount is 60,000. So this is increased by 9,000, na? 51,000 to 60,000. And accumulated depreciation credit 6,000. The difference is 9,000. So I can't understand the closing balance of assets after the refund government grant.
So see, cumulative additional depreciation that would have been charged to the P&L to date in the absence of the grant shall be recognized immediately in the P&L, right? So how much that depreciation is? So that depreciation is 3,000 plus 3,000, 6,000, right? This 6,000 is the depreciation amount, correct? Now,
Yes.
this 6,000 will be charged on immediate basis because I need to go back to the option where the grant was not deducted, right? So what would have been the depreciation? 20,000 and 20,000, right? 40,000 would have been charged. So 60,000 would have been my net book value, right? So to restore that, what is the delta amount I need to account for?
Sir, I think it is creating more confusion. Sir, you can you describe it in a new slide in a better manner?
Sorry, I missed. No slide. What do you mean, sir? Okay, let's
I
do
mean,
this
sir,
example.
could you,
Maybe
sir,
we'll get it cleared. Let's do one question here. So A Limited has received the grant of rupees 10 lakhs in the year 2001-2002 from a local government in the form of subsidy of selling goods at a lower price to the lower income group population in a particular area for 2 years, right? A Limited has accounted for the grant as income in the year 2001-2002, while the accounting for the grant in the year 2001-2, A Limited was reasonably assured that all the attached conditions to the grant will be complied with. However, in the year 2005-6, it was found that A Limited has not complied with the above condition and therefore notice of the refund of the government grant has been served onto it. A Limited has contested but lost in the court in 2005 and 6, and now the grant is fully repayable. The accounting done in the previous years was not incorrect and there was no error, right? As per the Ind AS 8. Analyze how should A Limited reflect the repayable grant in its financial statement in the year ending 2005 and 6. So let's do this question first. We will come back to our discussion. What do you think? What the company needs to do now?
Firstly, it was shown as the deferred income in the first place. Is it right?
Firstly, it was showed as
Deferred income.
correct.
Am I right? I'm asking.
Correct. Because the grant was related to the obligation for 2 years, right? So it can never be accounted for on the day one, right? Because the period involved is more than one period, right? So anyway, it has to be recognized over the period of 2 years. So deferred has to be set up in that case, correct?
So the grant becoming repayable. So it has to be the unamortized deferred income has to be deducted.
Correct. So whatever is the unamortized balance as on date, on the day when the letter of refund is received, right? So we simply need to see how much is the refund and how much is the balance. So the rule is if the outstanding balance is lower as compared to the refund amount, then the entire balance will be settled against the refund, right? And the delta would be charged to the P&L because this is creating a fresh liability on the part of the company, correct? And if the refund amount is lesser as compared to the outstanding balance, then there would be a settlement gain benefit, right? So ideally the balance was set say 5 lakhs or the grant refund amount is less than that, right? So in that case, it will be charged it will be gained to the benefit. So the standard says paragraph 32 of the India 20 states that the government grant that becomes payable shall be accounted for as change in accounting estimate as per India's 8. Repayment of grant related to income shall be applied first against any unamortized deferred credit recognized in respect of the grant, right? So if there is any unamortized balance sitting in my balance sheet, then first of all, that will be adjusted against the refund amount to the extent this balance is there in my balance sheet. And if the repayment exceeds, then the excess will be, recognized immediately in the P&L, correct? Because this is a fresh additional expense or liability for the company, right? We are not going to revisit our prior year financials, right? Because standard says clearly it will be treated as a change in accounting estimate, right? So this has to be done in the current year only. So we are not going to revisit or make any change in our prior periods, right? Or prior years, right? So what we are doing in the current period only. Correct?
Right.
Clear to everyone?
Sir, in the given case, we are in the year 2025, 2026. What if happen the court case is on 2023 to 2024? Means in the second year of the when it is not payable.
In the second year itself, right?
Yes, sir. Then should we done for 5 lakh different?
No. So if the refund letter is issued, thereafter amortization cannot happen anymore, right? Because the conditions are not met, right? So amortization continues only if the conditions are, expected to met. But here there is a objection by the government, right? So in that case, whatever is the unamortized balance will not be amortized anymore. So on that very date, amortization gets suspended to answer your question, right?
Yes, sir. For repayment, I mean in second year itself.
Right.
Should we do for 5 lakh? We will do a repayment of 10 lakh. If the nature is
Go ahead, please.
Sir, government grant is not means the conditions has been not complied in year 2024. Then we will for first year we have as per accrual we have done. For second year we have to de-recognize. So first we will de-recognize for the year which we have balance left in our repayable amount, and for balance we will do it from P&L.
See, in the year 1, deferred grant to P&L, right? Amount would be say 5 lakh, correct?
Yes,
this is the entry you have passed, and same entry you would have been passing in year 2 as well. But in year 2 itself, the letter has come, correct? This is the case you are asking for, correct?
Yes, sir.
So in this case, we will not pass on this entry because letter has already arrived, right? Now, on the day of the receipt of this letter, right? So what we will do? So we, instead of amortizing further, we will see how much the refund is asked for. Suppose if the refund is asked for, say, 3 situations. Case number 1, refund is asked full amount. That is the 10 lakh, right?
Yes,
case number 2, the refund is asked, say 4 lakh, right? And case number 3, refund is asked, say 6 lakh. Okay. So 3 situations, right? Now, in year 2, what would be the entry? That is your question, correct? If I am able to understand it correctly. Right? So in year 2, instead of passing on this entry, because I have already received the deferred letter. So what is the unamortized balance as of now in my books? How much? 5 lakh? 5 lakh is sitting as unamortized in my books? Yes or no? So in case 1, where the full amount is asked for refund, so the entry I will pass, deferred grant 5 lakh I already have, 10 lakh needs to be refunded, right? So 5 lakh, what I will set it up, deferred grant, sorry, P&L account debit 5 lakh to deferred grant 5 lakh, right? First of all, this would be the entry for making it to 10 lakh, and then deferred grant account debit to bank 10 lakh, 10 lakh. So this would be the entry in year 2. These 2 entries I will pass. Correct? In the situation 1, when the 10 lakh amount is asked for, if the amount asked for is 4 lakh, right? In that case, what would be the entry in year 2? So in that case, 1 lakh, I still have excess in my deferred. So the entry would be deferred to bank. How much? 4 lakh. Deferred 5 lakh, because outstanding balance is 5 lakh, to cash. Sorry, to P&L 1 lakh. Clear?
Clear, sir.
In second or in third case, again, because the amount is higher than the outstanding amount, so in that case, again, deferred amount 5 lakh, so already I have deferred amount 1 lakh I need to create and to bank account, right? 6 lakh. So this 1 lakh will go on the debit side in that case. Correct?
Correct, sir.
Clear?
Clear, sir. Clear. I have understood, sir.
Okay. So these are the journal entries which we just discussed for your future reference here. Repayment of government grant to grant payable 10 lakh and grant repayable to bank 10 lakh, because in the present case, the full amount as per the letter is being asked for, right? Okay. There are certain disclosures as well for this government grants and government assistance, which we have talked about, right? So what are those? The following matters shall be disclosed. First of all, the accounting policy adopted for the government grants. So what is the accounting policy? What do you mean by accounting policy? So accounting policy means if the grants are related to asset, then which accounting policy the company has opted for out of the 2 available options. Number 1, to set it up as deferred or to deduct it from the asset carrying amount, correct? So this is the accounting policy company has adopted. So they need to clearly mention this as a choice of accounting policy in their financial statements. Same goes for the income related grants. If they are going to showcase the grant as other income in the P&L statement, or they are going to showcase as a by way of deduction from the corresponding relevant expense, right? So this is the accounting policy for the government grants, which needs to be stated. Then detailed about methods of presentation adopted in the financial statements, right? So how and where, in which line item these are being presented. So this disclosure is required. So in the notes to accounts, I will mention that my grants related to income are deducted by way of, are presented in the P&L by way of deduction from the relevant expense line. So expense line name I will also mention in my notes to accounts, from which expense line the grant is adjusted in case it is opted for presented to be net. In case it is not and presented was under other income, then I will mention under other income it is presented in my statement of P&L. And if it is clubbed within other item under other income, then I will also state the name of that line item under which it is clubbed. Is that clear?
Clear, sir.
Then the nature and the extent of the government grants recognized in the financial statements, right? Which all government grants the company has recognized during the year in the financial statements, what is the nature, whether those grants are related to the asset, whether those grants are related to income. So that is the nature. Furthermore, to elaborate on the nature, if it is related to the asset, which asset, whether I am supposed to acquire a particular machinery, whether I am supposed to acquire, set up a factory, whatever asset I need to acquire, purchase, or create, I need to explain, right? And if it is related to the income for which expense the grant is expected to be received, so which expense I have to incur, what is the expected duration over which I will be incurring this expense, right? So nature and extent both needs to be explained well in the notes to accounts about all these grants and the government other forms of the government assistance from which the entity has directly benefited, right? So this is in relation to the government assistance. So if the government has provided you any economic benefit instead of the transfer of resources, so that is the government assistance. So those also I need to disclose in my balance sheet, what all government assistance the company has benefited from, right? For example, company has participated in a MSMED bidding quota and have won the contracts worth rupees 100 crores during the year. Out of that 100 crore, 50 crore contracts has already been executed, for which the 50 crore revenue has been recorded in my PNL, and out of 50 crore, 30 crore has been received from the government, and 20 crore is a debtor balance as on date, right? So this is how the disclosure for the government assistance will be made. Clear? Then unfulfilled conditions and other contingencies attaching to the government assistance that has been recognized. So at the year end, which all conditions are still lying unfilled, right? Or any other contingencies attaching to these government grants and government assistances needs to be disclosed in the form of disclosures, so that users of the financial statements will be able to understand whether the company will be able to meet these conditions and receive the grant or not, or whether there are any other contingencies apart from these conditions as well, which the company believes might impact the receivability of the grant in the future, right? Because generally investors also are very conscious about these benefits, because if they are expected to flow to the entity, it will be a massive financial support, and if they are getting withdrawn, then they will leave the entity in difficult situations. So investors are worried about their investments in the company, so they track generally these conditions fulfillment status as and when the annual reports are published, right? So this is how all the disclosures are to be made in the financial statements. Any question on the disclosure?
No, sir.
So let's see how the Hindustan Unilever Limited has disclosed a particular government grant which they have received in their annual report. They have made a disclosure for year 21-22, right? So this is a suggested disclosure extracted from the publicly available annual report, right? So the company says government grants. The company has received approval under the production linked incentive scheme of the Government of India for specific product categories. Incentives under the scheme is subject to meeting certain committed investments and defined incremental sales threshold. Such grants are recognized as other operating revenue. So the company is saying that they are going to record these grants as other operating revenue, means other income in the nature of this. So they are not netting it off from the related expense, right? When there is a reasonable assurance that the company will comply with all necessary conditions attached to that, right? So company says, as and when the company believes there is a reasonable assurance that company will comply with all the conditions and the grant will be received, they are accruing it, right? And how they are accruing it? By virtue of recording it as other operating revenue in their statement of P&L, right? So this is the extract of the statement of the P&L. Sale of the products, that is the core sales of the company. Then other operating revenue, income from the services rendered, commission from the consignment sales, and here is the line item under which the government grant is recorded. So what the company says, government grants, GST, budgetary support, and production linked incentives 140 crores, right? Previous balance 108 crores, right? Others, including scrap sales, rentals, etc., right? 121 and 88, right? So this is how this is presented. Let's do this question. ABC Limited has received the following grants from the government of Delhi for its newly started pharmaceutical business. 20 lakh received for immediate startup business without any condition. 50 lakh received for research and development of drugs required for the treatment of the cardiovascular disease with the following conditions: that drugs should be available to the public at 20% cheaper from the current market price, and the drugs should be in accordance with the quality prescribed by the World Health Organization, right? So these are the two conditions, that it should be at least 20% cheaper from the current market price for the similar drug, and it should be duly approved by the WHO, right? So 50 lakh is received. 20 lakh is received for immediate startup. 2 acres of land, fair value 10 lakh is received for setup of the plant, and 2 lakh received for the purchase of the machinery of rupees 10 lakh, useful life 5 years, depreciation is on SLM basis. How should ABC Limited should recognize all the 4 above government grants in its books of accounts? So maybe I can wait for you to pick this up and come up with your solutions ready, and then we will match what are the solution. So giving you some time just to come up with your answers on all the 4 grants. So just note down your solution and answers to all the 4 points, and then we will discuss. You have 3-4 minutes.
So first one would be government assistance for 20 lakh rupees because it is not related to any asset.
Okay.
And second one is for research and development for drugs, and this would also be for government assistance, not related to any asset.
Sir, first one is government grant. Now we are receiving 20 lakhs for the starting the business, and we will recognize it as we have started the business. We will directly get it into PNL. Na?
So you just finalize the answers for all your 4 points, and then we will discuss all of them in together once everybody is done, so that
Okay, sir.
you will be able to match your respective answers.
Okay, sir.
So once you are ready, I will discuss one by one. Ready?
Ready, sir.
Okay. So what is the answer for case 1? 20 lakh received for immediate startup of the business without any condition.
Sir, for me, directly as received without any condition, we will recognize it as soon as we will receive it.
Okay. So you mean to say straight away to the P&L, right?
Yes, sir. As an income.
Any contrary view?
No, we would be same, but would it be government assistance or government grant? It would be government assistance, I think.
Okay. So you are saying it is not a grant, it is a assistance. Okay. Any other answer?
Sir, recognize immediately as a grant.
Okay. So somebody said it is it instead of grant, it looks like as a assistance, right? So 20 lakh received. 20 lakh received. What it is? Transfer of resources or not?
Yes, it is transfer of resources, but there are no conditions, without any condition.
Okay. So if there are no conditions, then instead of treating it as a grant, we will treat it as assistance. No. So conditions have no role play to decide whether support from the government is the grant or the assistance, right? The only only criteria is whether it is a transfer of resource or not. So if it is a transfer of resource, then it is a grant. If it is not a transfer of resource but something else, other economic benefit, then it is a assistance. Is that clear? This is the fundamental thing which we need to be very clear.
Okay, clear, yes.
Right?
Yeah.
So as long as we are receiving something from the government directly in the form of transfer of resources, be it cash, assets, land, intangible assets, licenses, permits, rights, etc., all this is a transfer of resources, and hence, without any doubt, it is a government grant. Clear? Now, because there are no conditions attached, hence, it is a grant related to income. And how the grant related to income is recognized? Straight away to the P&L, because there are no conditions. If there were conditions, suppose which would have been met in the next 3 years, over the period of 3 years, then in that case, we would have been recording it on a systematic basis to the P&L, right? As and when the conditions are expected to be met, as long as the management is confident that they will be able to meet the conditions, right? Clear for the answer? Option A, right? 20 lakh.
Yes, clear.
Okay. Then for 50 lakhs, 50 lakhs received for the research and development of the drugs required for the treatment of the cardiovascular disease with the following conditions. The drug should be available at the to the public at the 20% cheaper from the current market rates and should have been duly approved by the WHO. What do you think?
Sir, a few minutes before you have what you have said, that we will it's in nature of related to income, and we will define it over the period of time.
Mm-hmm. Sorry, you are asking something?
No, sir. It's a case to answer, sir.
Okay, so you are saying that 50 lakh will be recorded as and when the conditions are satisfied.
Yes, sir.
Okay. Any other view?
Sir, recognize immediately when the conditions were not met, de-recognize or reverse the grant.
Okay, so you are saying 50 lakh will also be recognized immediately, right? And in case in future any conditions are not complied with, then in that case I will do the setup of the refund grant, right? But as of now, 50 lakh fully to be recognized.
Yes, sir.
Okay. Any other view?
I think it would be recognized systematically over the period of time until the conditions are satisfied of 20% available, making available this drug 20% cheaper in the current market, and the quality should be as per WHO.
Sorry, I could not understand. So what is
I
your
think
conclusion?
it should be recognized over a period, systematic over a period until the conditions are met on a deferred payment basis, deferred income.
Okay, so you are setting it up as deferred, and you say ki it will be recognized in the P&L over and above that period. But what
Yes.
period you will set it up in this case?
Sir, here management intentions come the accounting policy made by management for the government grants.
See, 50 lakhs should be recognized in the profit and loss on a systematic basis over the periods which the entity recognizes as the expense and the related costs for which the grants are intended to compensate, provided that there is a reasonable assurance that ABC will comply with the conditions attached to the grant. Now, in this case, we understood that because it is an ongoing process, right? Case 2 is different from the case 1, right? So in the case 1, there are no conditions, so upfront recognition. Because in case 2, there are conditions that it has to be sold in the market at least 20% cheaper, right, from the current market price, and it is to be approved by the WHO, right? So certainly WHO approval is a one-time condition satisfaction, right? So as and when WHO approval is met, this condition is met, and it will continue to be met in the future as well, right? Because once the approval is received, it is not withdrawn unless and until the pharma company changes the ingredients of the drugs, right? Which generally nobody does. Now, it should be available to the public at 20% cheaper from the current market price. So here is a important aspect hidden. So because I'm selling at a 20% cheaper price, so certainly I will be earning lesser revenue. Yes or no?
Yes, sir.
Yes. So lesser revenue means some cost to the company.
Yes.
Because if I'm receiving less revenue, otherwise I would have received the a normal revenue which the other companies are also charging in the market for the similar drug, right? But I am selling it at a 20% cheaper, right, from the current market price. So I'm earning less revenue. So it means I'm incurring some cost as well to that extent.
Yes.
And it is a continuous process. So management needs to come up with a expected period, right? Say for next 3 years, for next 5 years, right? This drug will be sold, right? And accordingly, over that period of 5 years, this 50 lakh will be amortized as a set off to this lesser revenue. So basically here, what the government is doing, government saying, okay, boss, you sell the commodity or the drug at rupees 80 instead of 100, right? For next say 5 years, which is a management estimate, 5 years, and I will give you the 50 lakh rupees as a compensation for this, right? So company accepted this 50 lakh, right, and started selling the drug at a 20% cheaper price, right? So because they are getting lesser revenue, and that is being compensated by this 50 lakh grant. So this 50 lakh grant in nutshell is compensating the lesser revenue for the entity, right? So this will be recorded over a period of over the period of time instead of recording it upfront, right? Because otherwise matching principle will not be in place. So my P&L will be distorted. For current year, I will say 50 lakh other income, my profit ratios go up, right? But upcoming 5 years, my revenue will be lesser. So there wouldn't be any matching. Getting my point?
Yes, sir.
Right. Now, the crucial question is, because with these limited facts where the period is not given, right? So we need to make an assumption. So I'm not going to reply in my answer that over the next 5 years. I will say systematically over the period over which this benefit will be granted by the company to the public, right? So there are two worlds. One is the examination world, one is the practical life world, right? So in the practical life world, we can gather more facts with the discussion to the management, right? And management can gather more facts with the discussion to the government. Okay, for how many years you are expecting us to sell this drug at a cheaper rate, right? But in examination life, we have very limited facts, like in this slide or in this question, right? So with limited facts, what I need to do, I need to tell my answer or my conclusion on the similar lines, that the 50 lakh will be recognized and systematically recognized over the period over which this benefit is being passed on by the company to the general public by selling the drug at the cheaper 20% cheaper rate, right? That would be the answer. Is that clear?
Clear, sir.
Clear.
Okay.
But can we recognize the income 20% each year, because we are selling 20% cheaper every year?
No. So 20% cheaper is the price, right? But if you project your sales equitably distributed over the 5 years, then SLM would be justified. But if you believe because the drug is newly launched, right? So in year one, the demand will be high. So management will create a projection of the sales in the upcoming 5 years, right? For example, in year one, 50 lakhs, in year two, 35 lakhs, in year three, 28 lakhs, right? So in that ratio, I can amortize 50 lakhs. So systematic basis doesn't always mean the SLM. Systematic basis means the proportion or the expected pattern in which the management is expecting to incur the relevant cost as well, for which the grant is intended to compensate. Correct? So that proportion management needs to come up with. So on day one, it has come up with, say, 35, 28, 28, 23, 25. Okay. So 2 years down the line, management revises. So accordingly, this will be treated as a change in accounting estimate in that very year. Correct?
Okay, right. Yes, correct.
Perfect. Third one, 2 acres of land, fair value, 10 lakh received for setup of the plant.
We can recognize it at the fair value or nominal value, or reduce the price from the value. The government grant, reduce the price from the fair value.
Okay. Any other answer?
Sir, for third one?
Yes.
Sir, for third one, we can either record it at a fair value or at a nominal value. If it's an without any if it's a non-monetary.
Of course, land is non-monetary. 2 acres of land.
Yes, sir.
Okay. So land should be recognized at a fair value of rupees 10 lakhs, and the government grant should be presented in the balance sheet by setting up the grant as deferred income. Alternatively, deduct the amount of the grant from the cost of the asset. In the given case, land is granted at no cost, so it will be presented in the books at the nominal value. So both the options are available. So I think both of you have said it right. So either recorded at fair value or recorded at nominal value, right?
Sir, what will happen if the land is provided by government but at a lesser price? For example, if the market rate is 12 lakh and we are getting it at 6 lakh or 5 lakh,
right?
Then it's non-monetary benefit because we are
right.
Then what
Understood.
will happen?
Understood. So in that case, what will happen? Certainly the nominal value option will not be available in that case, right? Because we are paying the price. So we are acquiring something at least some reasonable value, right? But because it is discounted, right? So the discounted amount would be treated as the grant amount in that case, like we do in our other case where the loan was given to us at a reduced rate of interest, right? So in that case, the fair value is 10 lakh and we are getting it for, say, 3 lakhs, then 7 lakh would be considered as the government grant in that case, right? So 10 lakh, it will be recorded at fair value, that is the 10 lakh, and the government grant will be set it up at say 7 lakh, because 3 lakh we have already paid, or we will simply deduct the 7 lakh from the 10 lakh and will showcase the land at the cost which we have paid for to acquire it at 3 lakh in that case.
Okay.
But generally, in practical life, company generally says the land which is fair valued at 10 lakh is basis on the future developments. But when we had acquired it, there was no, such huge fair value attached to it, right? So in that case, company says that, the price we have paid for on the date when we have actually purchased the land was this only, but after our purchase and after it was, gained the fair value. So those are all practical life aspects. But for the examination purpose, basis on the given facts, we will answer. So if basis on these facts, whatever you have stated, then in that case, we will record the land at fair value 10 lakh and the grant if separately set up at 7 lakh or otherwise net off at the 3 lakh.
Okay, sir.
Right? Last one, 2 lakh received for purchase of machinery of rupees 10 lakh, useful life 5 years, depreciation to this machinery is to be charged on a SLM basis. How should ABC Limited recognize the government grants in its book?
Sir, here also we have two cases. Either we can deduct it from the asset directly and show in at net basis, that is 10 minus to 8 lakh, or we can differently recognize 2 lakh as the government grant and 10 lakh as the value of asset, and then defer the 2 lakh income.
Perfect. So 2 lakh should be recognized as deferred income and will be transferred to the P&L over the useful life of the asset, which in this case is 5 years. And since the depreciation is being charged on SLM, so SLM basis 2 lakh also can be amortized. Alternatively, 2 lakh will be deducted from the cost of the asset and the net amount will be depreciated over the useful life, which would be 8 lakhs divided by 5 years, right?
Okay, sir.
Okay. So I think understanding is clear on the grant, government grant and the government assistance, right? So grant is transfer of resources, assistance is other economic benefits where no transfer of resources are taking place, right? So there are certain key differences between Ind AS 20 and the AS 12, right? So AS 12 you must have studied.
Yes, sir. In CA Inter.
Right? In Inter, ICAI, right? And now Ind AS 20 is in your CA final, right? So government assistance, Ind AS 20 deals with, AS 12 does not have any government assistance concept, right? So this is altogether a new item under Ind AS 20, which AS 12 doesn't been vocal about, correct? So AS 12 doesn't have anything as such government assistance. A recognition principle, all government grants should be recognized as income over the periods which bear the cost of meeting the obligation, right? It specifically prohibits recognition of grants directly in the shareholders' funds. But under AS 12, there were different recognition criteria. So there were grants related to the non-depreciable assets, there were grants related to the depreciable assets, and there were certain other grants which were not related to any of the assets, right? So accordingly, we were accounting them, in a different manner. For example, grants which are related to non-depreciable assets and no conditions attached, so straight away transfer to the capital reserve. Grants related to the non-depreciable assets with attached conditions credited to income, that is P&L, over the same period over which cost of meeting the obligation is charged to the income, right? Or alternative was also available to treat such grant as a deduction from the cost of the asset. So basically these two items are more or less similar to what we are doing under Ind AS 20. But this particular accounting treatment available for grants where there were no conditions directly transferred to capital reserve was altogether different under AS 12, right? Which Ind AS 20 doesn't allow. Then there were certain promoters contribution grant concepts, right? So Ind AS 20 doesn't contain any such grant concepts, promoters contribution or something like that. But AS 12 was talking about that, if there are any promoters contribution, then those will be recognized, that some government grants that have the characteristics similar to those promoters contribution require such grants should be credited directly to the capital reserve and treated as part of the shareholders fund instead of, treating them as a grant like the other grants we would be accounting for, right? Then non-monetary grants record at either fair value or nominal amount. Non-monetary assets given at concessional rate should be calculated, should be accounted for on the basis of their cost of acquisition simply. Or if they are free of cost, then should be recorded at nominal value. So fair value option was not available under the AS 12 at all, right? Clear? and then concessional loan. So concessional loan means rate at below market rate of interest. So here we need to do the accounting as per Ind AS 109, which we did one practical. So Ind AS 20 specifically covers this aspect. AS 12 was silent on this, right? So under IGAP, if the company is receiving a loan at a below market rate of interest from the government, nothing is prescribed by AS 12 to account for, right? Are there any differences between the Ind AS and the corresponding IFRS IAS 20? Earlier it used to be, now it is not, right? So both the carve outs which the institute has initially put up have already been withdrawn with effect from 1st of April 2018. One was option to recognize grants at nominal value, and another was options to present grant by way of deduction from the asset, right? So both these carve-outs have been withdrawn. So after 1st of April 2018, there are no differences as such, right? So let's try our hands quickly to check our knowledge.
Sir, just 2 minutes I'll take, and after that you can continue your MCQ.
Sure, please. Yeah.
Students, increase the volume there. Just a minute, sir. कहाँ से?
Ma'am, your voice is not coming.
So you continue.
Okay, thank you. So let's try these MCQs to test our knowledge, whatever we have learned so far since morning. So the time we have spent, at least we should check before we leave the session. Where are we? Finally, which of these disclosure is not required by Ind AS 20? The accounting policy adopted for the government grants, including methods of the presentation adopted in the financial statements, unfulfilled conditions and other contingencies attached to the government assistance, the names of the government agencies that gave the grants along with the dates of the sanctions of the grants by these government agencies and the dates when the cash was received in case of the monetary grants, and finally the option D, the nature and the extent of the government grants recognized in the financial statements and an indication of the other forms of the government assistance from which the entity has directly been benefited. So what do you think? Which disclosure is not required?
I think C is the correct answer.
C?
C, the names of the government agencies.
Unanimous or different view? Anybody has?
All other disclosures seems to be rate clear. Only C is like that.
Perfect, perfect. Well appreciated. As per Ind AS 20, accounting for government grants and disclosure of the government assistance, a government grant that becomes repayable shall be accounted for as a dash.
As in PNL. Sorry.
So when the government grant becomes repayable, how it is accounted for under Ind AS 8? As a change in accounting
Estimate. As per Ind AS.
Estimate.
Right? So change in accounting estimate, it should have been treated, right? Which of the following is not specifically excluded from the purview of the Ind AS 20? A. Government participation in the ownership of the entity. Government grant. So please. Covered by Ind AS 41. Government assistance provided in the form of tax benefits and forgivable loan from the government.
Forgivable loan.
Forgivable loan from the
In
government.
AS 20, forgivable loans.
Sure.
Yes.
Please read the question carefully. Which of the following is not specifically excluded from the purview? Forgivable loan, unanimous?
Yes.
Yes, sir.
Government assistance provided in the form.
No. Forgivable loan only. So I was just trying to recheck that everybody is sure or not. Right? So don't get confused when I ask something again. Grants related to income are government grants other than those related to
Grant related to asset.
perfect. For the purpose of Ind AS 20, accounting of for government grants and disclosure of government assistance includes the provision of the infrastructure in the development areas or the imposition of the trading constraints on the competitors. True or false?
True.
Everybody? Unanimous?
False.
Yes, true.
Okay. So mixed bag of responses. It is a false. So let's go back to the scope slide. The very first slide which we talked about, right? Government assistance. Government assistance means economic benefits, right? Government grant means transfer of resources. Economic benefits are government assistance. And then we have studied that if government is doing some general infrastructure development or certain imposition of the trading constraints or tariffs on the competitors' products to help the domestic manufacturers to grow, right? So those are the general duties of the government to discharge with, right? So those are not to be treated as the government assistance even, because there is no economic benefit as such. Clear? Hence the statement becomes
Yes,
false.
yes, sir. Yes.
Correct? Are you able to remember now?
Yeah,
The
yes, sir.
very first discussion we had in the
We
morning.
have only remembered the government assistance and development areas and consent, but we didn't get it's excluded from that. So
Okay,
it's a
okay.
false.
So you missed this word basically, right?
Yes, sir.
Okay. So that is the important learning by doing this MCQ. In examination, just read the MCQ carefully first, right? You might be knowing the concepts very well, but because of doing the answering in hurry burry, you will go away with your marks. Okay.
Yes.
Are the following statements within the scope of true or false according to the Ind AS 20 government grants and government assistance in relation to the benefits mentioned therein? Statement number 1, the provision of infrastructure in developing areas and the imposition of trading constraints on the competitors. So combination, both the statements are false. First is false, second is true. First is true, second is false. Both the statements are true.
Sir, we have just read it, sir. Both are false.
Both are false. Perfect.
Yes, sir.
So that was it. I hope the session was informative and value add for you. You must have learned the crucial concepts around this standard along with the practicals.
And sir, thank you, sir. Thanks for the session. And students, I was just observing from last 5 minutes, only Bibhu was replying, participative, and I request Sanjay, Ayush, Manish, and Leela also to be participative. Be interactive. The more you are interactive, you'll realize that you're not understanding what others are answering. You are applying your own mind also. So I request every student to be participative in the coming classes. Okay. Sanjay, Ayush, Manish, Leela, you got na? And you are there in that WhatsApp group also. Everybody, please just unmute yourself and just reply me. And
Yes, ma'am.
everybody,
We are in WhatsApp group.
okay.
Yes, ma'am.
Okay. So
Yes,
just
sir.
try to be participative during your class. That will be for your own benefit. So, and one more thing, I request everybody again to please fill the feedback form. That will help sir also to understand what he needs to improve and what is your expectations and work upon that. Okay. And positive feedbacks, if possible, please give. That will also encourage him. Na? That will motivate him. So we request everybody. So students, like we did in the last time, just take 5 minutes and fill the feedback form right now and give me that you have filled it. I'm waiting. It's a small feedback. Just give it. You're filling that form now. I'm waiting for that.
Yeah, ma'am.
So I appreciate everybody's attention for last 3 hours, and I hope I made a justice. And thanks, Shilpa ma'am, just for coming and spending some time with the students. It helps them.
I really want my students to be participative and also to give their feedback regularly, session wise, for every faculty. That really helps faculty also. And we also understand what is your expectations. We have, and one more thing which I would like to say, that we have also, at parallel with this live virtual classes, we have also started our live virtual revisionary classes, for which For financial reporting, we have 2 days, Wednesday and Friday, which will start from tomorrow. So initially we are starting with 115, and they'll only be covering the questions, important questions, which we feel will cover the entire standard, and the concepts will be just rebrushed. We are trying to cover only those questions in the session, and with that questions, in case any concepts are required to be explained, faculty will be doing that. Okay, so those students who are going to attempt in January 2026 are requested to go through those classes as well. Wednesday and Friday is devoted for financial reporting. Okay. So students Leela, Manish, Ayush, Bibu, Sanjay, hope you have filled the feedback form.
Just
Yeah.
Yes, filling.
Yes, I'm feeling.
Okay. So thanks everybody for making the session so participative, and I truly enjoyed interacting with you all today.
Same here, sir. Thank you, sir.
Thank you,
Thank you, sir.
and
Sir,
all the very best to
Hi.
all your for your examinations. Come with a chartered accountants degree soon.
Sure. So, okay, students, I believe that you all will fill that. We'll end up the session. Thank you, everyone.
thank you, ma'am. Thank you, sir.
Thank you, ma'am.
Anji,
Thank you,
yeah,
sir.
yeah, please. Bye.